Hi, welcome you all in this session. In this particular session, we are going to discuss about different ways of startup funding, or basically, this will help you to understand what are the ways so that any startup, any startup company can assess that options and raise funds for the business. So let's understand this, but I would like to put it everything in a very like pros and cons way so that you can understand it. So now if I talk about different options what we have, so the first option to start your business, or I would say like to start your startup is like bootstrap. So that option we can call it as a boost trap. So what is meant by boost trap? Can you think for a while? I'll give you 10 seconds to think over. What do you mean boost strap? See, boost trap, it means self funded business. Self funded business. So let's say you have one ABC startup, so which could be in, let's say, IT. You have your saving around 10 lakhs. So that 10 lakhs you can invest in your startup. So that 10 lakhs you can call it as a bootstrap funding, self funded success. So if I talk about now pros of self funded the process or bootstrap process, it's complete control over the business. So it means as an owner you get the control of your business, no dilution of ownership, no repayment obligations for a business. So in short, no tension, but make sure that you should have to have a funding. If you don't have your own funding, then you cannot call it as a bootstrap. Second, if I talk about now cons, means negative side of the same thing, require discipline, strong financial planning, best for a startups with low initial capital. See, sometime what happened, let's say this is your total saving, and if you invest total saving in a startups, what if, let's say, if you lose everything? So eventually it will impact on your financial goals as well. So when we talk about cons, so make sure that you should have to have your personal the strong financial planning, then only you can invest. All right. Now if I talk about let's say second option, which is angel investing. Angel investing now which is a tax exempted in India. So if you gain any, or if you earn any income or gain on any startup investing, then you can apply for a tax exemption benefits. But what is, let's say, this angel investing? See, angel investing, guys, very initially, if any investor invest money, very initially, it means very initially, if any investor invest money in your business or idea, so that investor you can call it as a angel investor. And now if I talk about, let's say, pros of angel investing, typically invest during the early stage of the business, provide mentorship, industry connections and strategic advice. For example, Ratan Tata, late Ratan Tata was great angel investor. Then Mr. Ambani, again, it's a I would say the angel investor, and there are many more like Sudha Murthy, Narayan Murthy, all are angel investor. And now if I talk about cons of angel investing, higher risk tolerance but expect significant return on investment, fast decision making compared to the institutional investors. So you can see high risk, because to invest in early startups, it's a risky bet. But as a, see, if let's say Ratan Tata invest 1 crore or 2 crores in any business, so it's like nothing for him, right? So only the big investors, I would say, only they invest through angel investing way. The third option which we have is like venture capital. Venture capital, it means it's a firm where they only invest in a startups. So that firms, you can call it as, guys, venture capital. So basically that helps to fuel growth. Means after the the startup phase, your venture capital funds basically target such a companies and invest funds. If I talk about, let's say, pros of venture capital, best suited for a startups in a scaling a growth stages. Large funding amounts are available for a businesses with proven traction. And on other hand, if we talk about cons, loss of some control due to equity dilution and involvement of VCs in a decision making, offers mentorship, access to networks, and credibility as well. So here, through venture capital, as a promoter, you will have to dilute your stake. Let's say if you're holding 100% equity, post in a venture capital entry, your equity looks like, let's say, 20% you have diluted. So 80% would be yours and 20% it will goes to the venture capital, because venture capital will fund to your business, right? So there are private equity funds like Blackstone, KKR, then ICICI Venture Capital. So all they invest in a startup companies and they multiply their returns on investment. All right. Then the another option, best option is like crowdfunding. So what do you mean by crowdfunding, guys? Connecting, the with common crowd through social media or different platforms. So you can register your business on different platforms and share that link with others, or you can promote that link with others. And if the people are, let's say, really interested, so that they can invest funding in your business. So that process you can call it as a crowdfunding. Right. So you can connect with any crowd, new, existing people, any means any. Now, if I talk about the one pros of crowdfunding, can pre-sell products or offer rewards, equity or debt, to backers, build a community of loyal customers and brand advocate. So basically, your crowd will help you to raise funds. Maybe you can reach out to the customers, your vendors or existing people which know you better. You can reach out to them and ask for the funds. So they'll fund to you. So that funding you can call it as a crowdfunding, and that funding you can raise through equity as well. Then if I talk about cons, in terms of cons, no need to give up significant equity or control to anyone. Right, no need to give up significant equity or control. Reward based crowdfunding also you can raised. High competitive, success depends on effective marketing and compelling pitch. So this is how you can understand crowdfunding. Then the next one is the government grants. See, if you are let's say in India, so as per the Indian government, Central Government Act, they have a lots of initiatives which support to the government, which supports to the startups in terms of funding, and you can raise funds, right? So where you don't need to dilute your equity as such, so you can go through the government grants or subsidies and apply for funds, and they'll support to you. And this in terms of cons, it often targeted towards particular industries like technology, clean energy or healthcare, limited funding amounts compared to the private investor. But yes, when we say grants or subsidies, the amount would be very low. So if you see if that meets your needs, then that's fine. All right. And yeah, apart from means traditional funding ways, you can also explore the other options like bank loan, traditional debt financing for a startups with proven credit history or collateral. If you have a collateral, you can collateralize it and raise funds. So that's also comes under your funding process. There are several incubators or accelerators programs which provide mentorship, office space, and small innocent funding in exchange for equity or partnership. You can also look for that programs as well. Then corporate partnership, investment from larger companies in exchange for a strategic alignment or equity. So you can sign contract or connect with big companies, and you can sign partnership agreement with them, and they'll support to you to means to gear up your business operations as a startup company. All right. Yeah, that's all I wanted to means tell you the ways of startup funding. Now, if you just ask me means how you can choose a funding option. See, basically to choose a funding options which is based on your stage, at which stage you are, whether it is early stage, growth, or mature stage, right? And then accordingly you can take investment funding decisions, because this maturity stage here you can also raise funds through IPO as well, initial public offering. You can sell out your securities to the public, and then you can invest in those securities. Or as a startup owner, if they have the facility to sell it out securities to the people, so that also would be good, I would say. But in early stage would be difficult to sell the securities to the public directly. Then industry, in terms of industry like technology, healthcare, and others, this is also very important. And vision, also align your long term, short term, the vision, because it depends on your means your fundraising process. It depends on your vision as well. If you're looking for a short term, go with a debt. If you're looking for a long term, go with equity. So these are the key, the considerations which you can think of while raising funds. All right, so I'm done with the session. If you like this, please go ahead and subscribe to the channel and stay updated on business A to Z, the funding or startups or cryptos and all. So we'll see you next episode. Thank you very much for watching this. Thank you.